another cash budgeting sum. So we'll work out this cash budgeting sum. First we'll start with the required. Okay, then we'll move on. So in this problem, we are going to work out the cash budget. So it is prepare a cash budget for each of the 4 months to October, indicating the month-end overdraft requirement. So the question also asks you, prepare the sales and budget and purchase budgets for the 4 months to October. So we don't need to work out the sales budget and purchase budget separately. It would be as part of the cash budget itself. So we can work it out here. We'll read out the first question. So Peter Black is considering the acquisition of an electronic business. Peter could finance the cost of furniture and fixtures 20,000, lease and property 30,000 from the sale of investments. He will, however, require substantial assistance from his firm, from his bank to finance the working capital. Before considering this facility, the bank requires information regarding expected profitability and liquidity. Peter has given you the following information. So he has given you what is the sales estimated. Okay. So cash and credit sales are given separately. July, August, September and October has been given. So the 4 months up to October are these. From July to October we have to prepare the budget. The average credit taken by customers is expected to be 2 months. So credit sales, the cash will be realized only in 2 months time. Bad debts are expected to be 1% of sale. So 1% of this amount would be bad debits. And the average gross profit percentage on sale is expected to be 25%. So out of the total sales, 25% is the profitability percentage. Inventory levels at the end of each month are planned to be sufficient to cover the following 2 months sales. So inventory has to be at the end of each month are planned to be sufficient to cover the following 2 months sales. Okay, so the inventory, the closing stock should be equal to the sales of the first month and the second month and the third month. So that would be put on the first month. Okay, adequate supplies are to be purchased in July to meet this requirement. So there is no opening stock for in July for inventory levels. It is intended to settle purchases by the end of the following month in order to obtain a 2% cash discount. So this is where they are going to is going to be the purchase and the settlement of it. Expenses are estimated to be follows. So sales and distribution expense is 8% of sales. I think that should be like both sales put together. And administration and general expense are 2250 per month. The leasehold is 30 years and furniture and fixtures are expected to have a useful life of 10 years. So that's for depreciation calculation. We don't need to calculate depreciation for this sum. Depreciation is included in general expenses. Other expenses are paid as incurred. So depreciation has already been included in this 2250. So that has to be removed because depreciation is a non-cash expenses. So other expenses are paid as incurred. In the same month they pay it. Interest of 18% per annum is payable at the beginning of each month on the previous month's closing draft. So once we know what is the closing draft, the next month we pay the 18% interest. Okay, so that's about the problem here. So we can quickly start to work it out. So, so we'll start here. We can start with sales. So for sales, there are actually two elements. One is cash sales, another one is credit sales. So credit sales has 2 months credit. So opening cash is 0. So we can put the cash sales. Cash sales is 5, 8, 10, and 12. And credit sales is in 2 months time we will receive it. So the sale made on July will be received on September. So September amount would be 20, but not all the 20 we will receive. Only 99% we will receive it, because the balance is bad debits. So 20, and for August we'll get receive 24. So that's about the sales part. Let's get the other items. So I think that is the only total income there. So we'll go to the expense part. In expenses, we have purchase, so purchases will be paid in 1 month time. So I think we can't directly work it out. We have to work out put a working note for it. Working note 1, purchases. So we'll start here. So what they tell is that inventory levels at the end of each month are planned to be sufficient to cover the following 2 months sales. Okay, so the inventory level should be on the basis of the sales here. So we need to have the total sales number. So first we'll take the cash sale. On the credit sale, we'll total it first. So thereafter we can get the total sale. So cash sales is 5, 8, 10, 12. Credit sales is 20, 24, 30, and 36. So the total would be, okay, so this is the total of sales. So next is to find out what is the value of inventory. So gross profit, if you take gross profit would be 25% of this. So the balance is cost of sales. So cost of sales we can assume it to be inventory level, that we can assume that to be inventory. So cost of sales, we'll take it as the raw material value that has been sold. So if you take a trading account, okay, so this would be a credit item, this would be a credit item, and this would be the this would be a debit item. So both, when you add, we get the sales amount. Now so this is the cost of sales that we have. So let's see. Inventory levels at the end of each month are planned to be sufficient to cover the following 2 months sales. Adequate supplies are to be purchased in July to meet this requirement. So if you see the closing inventory, should take into account the 2 months sale. So we can work out in reverse. See, the business is going to be continued, so inventory would be the same amount. So that's what he says. October onwards, it will be the same amount. So if you take November as well as December, the same numbers will get repeated. Okay, so it will be 36 of cost of sales that would have to be made. So we'll work out in reverse. So these two cost of sales should have been bought and kept in October. Okay, so it would be this number plus this number has to be in as closing inventory. So what about September? September would be these two amounts. Okay, these two amounts. In August, we should have inventory covering this, and in July we should have inventory covering this, both these months, but we don't have any previous month before it, so we have to cover this also. We have to cover July's also. So July's actually opening inventory itself would be like a different amount. Okay, can't say opening inventory. So opening inventory, we have to purchase this also. So this would be our closing inventory. Now how much has to be purchased? That becomes a question. So purchase would be, we have to purchase for the first July. Okay, for July we have to purchase this as well as the next subsequent 2 months. Okay, so both we have to purchase and keep. So we have to purchase this as well as this. So this is what we have to purchase in July. But what about in August? In August, see, if you take July, we have already purchased up to September, we have purchased. So in August, all that we have to purchase is for up to the October. Okay, we have to purchase up to October because 2 months sale should be the inventory. So this would be the inventory. So thereafter it would be just 1 more month we have to additionally purchase. We don't need to purchase everything. So in the first month alone, we have to purchase the current month sale raw materials as well as August and September. But thereafter, as we have purchased for all the 3 months, thereafter it's just 1 month, then again a 1 month, then again a 1 month. So this would be the purchase. And when is the payment made? So it is intended to settle purchases by the end of the following month in order to obtain a 2% discount. So we can put it like this. It is purchase which is 1 month and they will get 98. So when will this will be settled? 1 month later it will be settled. So this number into 98 percentage will be paid in August. Subsequently, we can also work out for other months. Okay. So now we can copy this part and we can go here and we can paste the relevant numbers. So we have done. So the next item here, see from here on I think it's quite easy because see we can find out the expenses. So we have one expense called as the selling expense. So these expenses are paid in the same month. So 8% of sale. So again I don't think we can work out for so easily. So as we have worked out the working note, we'll just put working note 1. Okay, for this also we have to do a working note 2 we'll do. Why should we have a working note? We'll just see. See, we need the total sales. Without that, we can't work it out. So we have got the selling expense. On selling expenses, 8% of sale. It's 8% of sale. So we can work out like that for all the months. So done. Now we can copy this. So this is working note number 2. We'll just change that. So done. So what else we have? We have administration, which is 2250. From this 2250, we have depreciation. So we have to first remove the depreciation or else we can't work it out. So I think we have to do again a working note. Okay, so first we have to calculate, first we will put the expenses. So the amount is 2250. Then we'll calculate the depreciation on leasehold. See, that will be having a life of 30 years. And we have another one. So that is depreciation on furniture. So furniture has a life of 10 years. So we have to get the worth of it. So furniture is 20,000, lease is 30,000. We'll see once again. Furniture 20, lease 30. Furniture 20, lease is 30. So what is its worth? I think it will be 1,000, and that's per annum. And for furniture, it would be 2,000 per annum. See, we don't want per annum. We'll also have to get per month because these are per month numbers. So I think we'll work out total depreciation per year. Total depreciation per month. I think that we'll try to work out. So per year depreciation is 1000 plus 2000 divided by 12. That will give us an answer. So what is the answer we have to see? So that is 250 per month. So 250 we have to deduct from here. So depreciation or less depreciation. So every month it is 250. 250 have to reduce, and we'll get the adjusted admin expense. So that will be 2000. For all the months it's 2000. So we can copy this and we can paste it here. So that's done. So we can't put it as 2000. I think we'll put it as 2. So if you want, we'll adjust it in terms of 1000. It will be 2. Okay. So what else we have? Depreciation is over. Selling is over. Interest of 18% per annum is payable at the beginning of each month on the previous month's closing draft. So only when there's a closing draft we have to find out that. I think we'll go to the end of the sum. So opening cash is 0. Total income would be sum of all these. Close it. Find out the total expense. So total expense would be sum of all these. And what's the closing cash? Closing cash would be total income minus total expense. Okay. So we have 1. So this 1 will be pulled here. Okay. So next, let's see for August what's happened. In August we have 9. We have 75. And what do we have as the closing cash? We have 66. So for 66 we have to pay interest. So interest, when do we pay it? Interest of 18% is payable at the beginning of each month on the previous month's closing draft. So interest will be paid. So there could be another item here. Overdraft interest. So overdraft interest is not paid in August. It would be paid in September. So in September, how much of interest we'll pay? We will pay of the deficit. The total deficit is this number. So we'll pay on that. So it would be 18%. So also, if you do this, we'll get a negative number. So negative number we should not have. We should get a positive number. So let's put a minus and check, and yes, we have the minus symbol has negated the other negative number. So this is the overdraft interest that we have to pay in the next month based upon the deficit. So now we can calculate the total expense. Sorry, we have to get the opening. So the opening again, the opening would be this number. So total income will be this, and total expense I think we have calculated. Just let's see whether we have calculated correctly. No, it has not taken correctly. Let's get the deficit. This is the deficit. So deficit also we got. Again, as it's a deficit, we will get a, we have to calculate interest also. So this is the interest that has to be paid. Let's get the opening number, total income. So total income is negative here also. And total expense is this, and total cash, closing cash would be this. Okay, so it is overdraft in all these years, so that can be an action. So the action is the company should get a overdraft in all these months.